Loaner vehicles. You guys know what a loaner vehicle is? First of all, the dealership has to have a loaner vehicle because they need something for a person to ride around in if they're getting their car repaired and they're not going to be able to get the car back to them and they don't want to listen to you fuss all day. So they're going to give you a car so you can leave the dealership. So you're not going up to the window every 20 minutes saying, when's my car going to be done? They do this with my husband all the time because they don't want to put up with him. So they'll give him a car and say, go do what you need to do or take it home and come back tomorrow and we'll have your car fixed. Now, the dealer takes the car out of inventory temporarily. He goes in and he gets a title and he titles and registers and puts a plate on this vehicle. He cannot loan somebody the vehicle that has a dealer plate on it. That'll get you in trouble. Only a person who works for the dealership should drive a vehicle with a dealer plate on it. Now, we all know that never happens outside of that, right? They also are not supposed to put that little drive-on tag that says, I'm ABC dealer, and drive around on that. So they actually put a car that the dealership owns. Now, this says it's going to be used as a courtesy vehicle at no charge for a period not to exceed 30 days within a calendar year to any one customer. Now, who's going to police that? Do you know who they let that car go out to? You don't. But that's the statutory definition of what a loaner vehicle is. So now we know what the vehicle is. Why does it matter? Well, the dealership needs a vehicle, so he's going to pull one out of inventory, or if it's a new car dealer, the manufacturer may have given them a car that says, this is your loaner car. You're going to use this as a loaner vehicle. So they're going to take it, and they're going to walk into your office, and they're going to tell you, I need to title and register this vehicle. Now, they don't want to pay 6.5% of the value of that vehicle. And back to our conversation this morning, who was sort of helping with this legislation? The dealers, okay? So they've said, okay, with this car, if I only keep it as a loaner for no more than 180 days, I am going to title and register this vehicle, and I'm not going to pay any title ad valorem tax. So they're going to come in and you're going to process it for the cost of the title and the cost of the registration. Here's another case, Cindy, that you would have a situation after March 1 that you have a vehicle that's not going to pay TAVT. Now, you see on my little arrow going up in the middle there, if the dealer returns that vehicle to inventory within that 180-day period, everybody's happy. But if he keeps that vehicle out of dealer inventory for over 180 days, he now owes the full TAVT tax.
Who's going to regulate that?
You are.
Good thing we don't deal with all that.
All right? And you're going to send a friendly letter to this dealer to say, you owe me. Now, this is kind of like you being late paying out. It's probably not going to happen to that dealer but one time, right? Now, how do you know he's turned it back in? He would turn the tag in, or he would come in and say, you know, I'm putting this one back in inventory and I want to transfer, let me get another one and put it in dealer inventory, right? So they're under some responsibility. First of all, they have to tell you it's a loaner vehicle or you're going to charge the full rate. So they're under some responsibility to tell you, hey, I'm a loaner. Now, the dealers themselves have said, we think we need a form. They didn't even wait for us to do it. They want something that they're bringing in to say, this is a loaner. I said, great, if you want one, why don't you design it? And we'll look at it and see if we like it. So that's being worked on right now. So there'll probably be something that you will be used to seeing if you deal with a lot of dealers that they would bring you. Now, this is walking through the process, and I'm not sure how easy that is for you guys to see, but basically, the top line is they register the vehicle. If they haven't kept it out more than 180 days, the process ends. You know, that vehicle is back in dealer inventory. You'll notice here, if I can point to it, there's an on-demand report that you can pull to see how many vehicles you actually have out in dealer inventory as dealer loaners and what their status is. How many days they've been out, what day they went out, what vehicle it is. So you have the ability to pull that whenever you want to. Now, if it's been out longer than 180 days, there's now a free-form letter in Gratis that you can send this dude and say, hey, you owe me. And you owe me X because this vehicle is valued at some number times the title rate. If he pays you within 30 days, everybody's happy. Now, again, he also needs to relinquish that plate because he's, well, of course, if he pays it, he doesn't have to, right? Because it's now just his car. He can do with it what he wants to. So, but if he doesn't pay you, then you're going to have to generate another letter and send him, and that just continues to go on until you finally get that vehicle. It also is going to calculate 10% penalty if he doesn't pay it timely. So now he not only owes the TAVT, he owes 10% of the TAVT, plus he's going to start owing interest at 1% per month. Again, I don't think it's likely to happen more than once. Now, this is one that I think we'll probably see a legislative change because apparently, and I don't know a lot about the dealer world, there are manufacturer agreements with some of the dealers that they are required to keep a car in as a loaner car for up to a year. So we may well see a change in this one, but this would be an easy change for us to manage in Gratis. And for you, just means a little more tracking. If something's out there a year, you just have longer. Now this is a report and it's probably not real clear, but basically it's listing the dealer number, the VIN number, the date the vehicle was registered, how many days that car has been in loaner status. And on that first line up there, it's really hard for you to see, there's zeros because that car has only been in loaner status for, I don't know if that's 18 or 10, but whatever it is, it's less than 180. So there's nothing due at this point. On those next two, you see dollars out there, right? Because one of those has been actually out in loaner status today, 181 days. So on day 181, he now owes TAVT, and the other one has been in loaner status a little bit longer. This will also calculate penalties and interest that are due. So this will give you some way to help track those vehicles and keep that going. All right, let's talk about another group that's going to get special treatment. This is a vehicle donated to a nonprofit, nonprofit being somebody who has a 501c3 from the Internal Revenue Code, and this vehicle is donated to the nonprofit for the purpose of being transferred to another person. And when the vehicle is titled to the nonprofit, it's going to be subject to a reduced rate of 1% of the value times the value of the vehicle. This would be an example of some organization, I'm using Tommy Nobis here, that somebody will donate a car to. Perhaps that organization does on-the-job training, these vehicles are repaired, and because typically when they're donated, often they're not running or they're not in great shape. As part of a job training program, the vehicle is repaired. The vehicle is sold after being repaired, and the money, of course, would go back into the organization. Now, why would they have a reduced rate? First of all, you're dealing with a nonprofit, right? Second of all, are you not dealing with a vehicle that's probably not in great shape? So you've got a couple of reasons here. Now, who's going to ask the question? Okay, I'll wait till y'all ask it. I won't get there.
Are you talking about what happens when it's given to that other person?
Well, whether it's given or sold,
Sold, okay.
on the other end, it's subject to full title tax. So when it goes out of the name of the organization to this new owner, it's now subject to full title tax.
We have no longer bound within the county, but they have a dealer number, so they don't typically retitle the vehicles into their. Will this require them to
No.
do that?
No.
They won't have to even pay the 1%?
No, they wouldn't have to pay the 1%. Says that they have no longer bound, and they have a dealer number, so they're doing the dealer assignment. And so they're not actually changing that title until they're selling it. Now, when they sell it on the other end, or even don't give it to someone on the other end, there is a title tax associated with that transaction.
Have a nonprofit that they donate that vehicle for a write-off of their taxes or whatever. Nonprofit's going to use it for that.
It's not exempt.
6.5%,
Right. The problem I have with this one is, how do you know? Are you going to track that vehicle that is titled to that nonprofit to what happens on the other side?
If they register it and get a tag for it.
Yeah. But they're going to continue to renew that, I suppose. But are you going to track that it ever really gets sold to someone else? I mean, I think this one has, the more I've talked about it over the last few days, there's some things that I can see that, you know, they're saying, I'm donating it to this nonprofit and this is what's going to happen, but there's nothing in there that says if this doesn't happen, what happens? It's just kind of open-ended that this is the process, and so that's what's going to happen. So if it never gets donated and it just stays in the name of the nonprofit, it just stays in the name of the nonprofit, I guess. Because I'm not even sure that you have any leverage unless you knew it was an out-and-out falsehood that it was going to be used for this purpose to do anything about it. So this is one that to me is a little bit troublesome, and it's kind of come to me the more I've talked about it over the last few days and thought about it. Some of this stuff looks really good when you first read over it, and then you start really thinking about getting into those transactions. This is
Go to any county too, so you have.
sure.
I mean, you know.
Absolutely. The nonprofit could be in Cindy's county, in White County, and that could be where that initial transaction occurred, but they sell it to somebody that lives in your county. Or they give it, or however it gets there. So this one, I think, is one that we may need to try to develop some rules and regs around this, or some business rules. It's one of those I think we're going to have to let play out a little bit to figure out what the problems are with it. Again, we have an affidavit. I know you're surprised about that. This affidavit basically says, I am a 501c3, and in fact, they're going to bring you a copy of that 501c3. They need to bring you, they have that certificate from IRS. You're also going to want a picture ID of the applicant, and this is in rules and regulations too. And under the affidavit, they're basically in this affidavit attesting to, I am a nonprofit, this car is being given to me, and I'm going to do something with it. It's not going to stay in my ownership. At some point, it's going to transfer out of my ownership. Again, this is one of those affidavits that they're attesting to something, so if you find out down the road that they weren't telling the old truth, would be a situation that you might want to talk about one of those penalties that we talked about earlier. I don't know that there are a lot of these transactions, but apparently there were enough that somebody got this in the code section.